And it's great to have you join us in another edition of our weekend business program, Capital Market. The last one for the month of April, live on Channels Television. I'm Ladi Williams. Let's begin the show with a review of some of the major stock markets' performance around the world. And that's for Friday. Major bourses around the globe ended the final trading day of April positive across board as traders digested fresh economic data and more corporate earnings within the week. On Wall Street, the Dow posted its best month so far this year. The industrial average ended with a 0.80% gain. The S&P 500 that rose by 0.83%, while the Nasdaq Composite, the tech-heavy Nasdaq, was up 0.69%. It's also a similar picture for markets in Europe. The UK's FTSE 100 index gained 0.5%. Germany's DAX rose by 0.77%, while France's CAC index closed the day up 0.10%. For Asia-Pacific region, markets were largely up on Friday after the Bank of Japan kept its monetary policy unchanged in the first monetary policy meeting chaired by new Governor Kazuo Ueda. Japan's Nikkei 225 ended Friday up more than 1%. Hong Kong's Hang Seng index rose by 0.27%, while the Shanghai Composite soared by over 1%. For analysis now for the U.S. markets, joining me is Olumide additional financial market analyst, joining me via Zoom. Olumide, great to have you on the show. All right. Okay, we'll try and get Olumide back on Zoom. Carrying on now to our local market now. Back here, we see the local equities market. Investor sentiments ended the last trading day of the week in April in significant gain as a benchmark index, and the equities total value rose by more than 2%. Within another 4 trading sessions this week, the activity chart ended positive as the total volume, value, and number of deals carried out this week were significantly higher, in contrast to the activities recorded on the NGX last week. Sectoral performance was mostly positive, except for the oil and gas sector index of the market, while the shares of Boer Foods, MTN Nigerian, and Airtel Africa were credited for the gains recorded within the week. Meanwhile, Honeywell tops a list of 49 gainers with a 34.91% increase on its share price. Nigerian breweries led 16 other gainers losers down by 11.48%, while the trio of Transcorp, Access, and Fidelity Bank were the top 3 contributors to more than 14 million shares traded this week. And now to matters here. Well, annual general meetings are a big part of investor and company relationship, and investors in Nigeria's capital market have kicked against a provision in the Business Facilitation Act 2023 that allows all companies, including publicly quoted companies, to hold their general meetings electronically. Well, joining me now is Sonny Nwosu, founder, Independent Shareholders Association of Nigeria, joining me right here in the studio. Great to have you, sir. It's been a long time.
Thank you very much.
So, this issue about virtual AGM meetings, why are shareholders kicking against this?
Okay. Because, again, it's policy somersault. December 31st, CAC, which regulates meetings of companies, said that they are no longer approving virtual meetings. And therefore, why should government, on the other hand, return back to now say shareholders will have to be doing what they call a dual meeting? We kick against it because it doesn't really show, however small we are as minority shareholders or shareholders owns every company that needed a seed money. So we believe that they do not have enough respect for us. And there have been a lot of innovation into this. You need to see your directors, assess them, and ask questions to enhance your investment in place. But when we are doing virtual and all this, we don't see them. And it has not worked because of network problem. Few of the companies that had a virtual meeting last week, you can't even talk. It's like, it's just like personalizing it. Only those they want to talk. And in fact, it never worked. Because as soon as you start talking, the network will switch you off. So it doesn't have any value. So we feel that, no, that is not...
But I've been, at one of the most AGM meetings of these companies, and I see when they choose, who to speak, on the floor, they could just pick, randomly. And
that's actually the prerogative of the chairman to...
the chairman, exactly.
Yes, to actually choose who to speak at the AGM. But even as at that, chairmen will also interact with their shareholders. And shareholders will interact with the directors of such company, which gives a sense of belonging to us as shareholders. So we didn't feel fine about it.
But I believe technology should be able to make this easy, even if we want to take it electronically. We've seen how Zoom has come into, during the pandemic. We've seen how, organizations have used Zoom to carry out meetings.
Again, it's not within the law, because anything about that sort of meeting has to go through National Assembly for the approval of, as a law, into bed. Up to today, there's nothing like that. It's only about 1 or 2 companies that sought the approval of their shareholders to go that way. Otherwise, it's an illegal thing, because it's a fundamental thing that the National Assembly has to discuss and approve, and it becomes part of the law guiding investment. I think the major problem where government should look in is how to ensure that investment goes, when you import $1 into this country, you are entitled to export your profit. Today, they are talking about so many things that will claim dividend, whereas all the multinationals that brought in money into this country to do business, they can't even export their dividend because there is no foreign exchange cover for it. And the issue of taking over unclaimed dividend, which does not belong to government, they should look into that and douse the annoyance of investors on that. You will see the economy of this country will move up. So we do not actually like it. Let me tell you something. Just yesterday, there was a clear innovation which we appreciated on that issue. A company had, about 2 companies had their AGMs yesterday. One of them decided to house some shareholders in a gallery, and they allowed them to speak. Also, those who want to speak through electronically were also allowed to speak. We were very pleased with it because it gives us opportunity to contribute to the growth of our company. Even as at that, some of these things, you call in to tell this, okay, make your position or your point. The network will just go away. And there's nothing. Most of the problem that people suffered during this exchange of Naira was network problem. Some of the banks had a lot of crowd because of the network issue. Until we improve, NCC should look into those things.
Yeah, definitely be great to have, stronger internet. That way, nobody gets,
nobody gets frustrated
at the meeting, when it's going on virtually. But looking at it, from another angle now, wouldn't it cost the companies less, to run AGM meetings if they're actually able to, do it electronically, and we don't have any, no internet issues, everything is, done smoothly, and you can also have your do your votes and make your recommendations.
It's cheaper
electronically. That would be cheaper for the companies.
For the mere fact that you can't even enjoy the meeting because of network issue.
I'm saying, in a perfect world.
How would they do all that? When they are looking at what to get out of the company and the shareholders, they are not even thinking of how to make the meeting stress-free for both parties. So that's the problem. That's why we are not subscribing to it. We are really not subscribing to it because it doesn't give us any access to good meeting. If it gives us access to good meeting, it helps. You'll be in the comfort of your room and also enjoy the AGM. At the end of
maybe they can give more to the shareholders, if they don't have to spend on physical AGM meetings.
If they can, but what I am still advocating is that most of the directors don't have respect for minority shareholders, because they just saw them as people who are troubling them, whereas they make good point, which help to improve situation in the company. And all these directors goes away with millions of naira. We are not bothered about what we are saying. Give us what we're entitled to, So your point is well taken about this. Let them make sure that the internet works. So if I want to contribute to a meeting, they will hear me, I will hear them. the network issue is disgraceful in this country.
Yeah, network can be quite a bother with all of these things.
You, for instance, now you wanted to pick out somebody to give his information. You couldn't.
Exactly. So that actually happened live on the show. Yeah. Quite interesting. But how would you say these AGM meetings actually benefit the companies themselves?
Okay. One is that it is the companies will report to the shareholders that this is the way the operation for 1 year goes. And the shareholders will read through their report and also make recommendation to them that this side you have actually spent too much money. If you can reduce it, we'll have more dividend. Then that's the way it helps them. But the next year, some of them take the advice in good faith and do these things and pay better dividend. At the end of the day, why do you invest in a company? It's for you to get a better return. So, and they can eat whatever they want to eat. And in some cases, if they overeat, they get their tummy burst. So, but then we would have done our own best to say, you have done well here, but you are yet to do good here. I mean, it's a win-win issue for both parties.
And shareholder associations are always able to point out where the companies are making mistakes.
Yeah. It's actually not in my practice to criticize any shareholders association because we are the biggest shareholders association. We do a review and send to them ahead of the AGM. So once we send them a review of the activities sent to us, we don't repeat that at the AGM again. We leave them to work on that. But we do a holistic review of the annual report, whether it's 500 pages, we do that. Because in our association, we have a committee that looks into all annual reports. We have accountants, lawyers, and all this and that. They are embedded in that committee that looks into and bring out the position of the association, which we send to them.
And definitely, I'm sure you've attended a lot of AGMs already.
Well, I've been in practice of attending AGM in the last 50 years. So.
Yes, I'm saying for 2022, the financial year,
we do
2022, and a lot of companies have already done the AGM this year.
Yes.
And 2022, a challenging year, for businesses. How have they fared? How have these companies really fared?
Well, they did very well because at the beginning of the pandemic, we didn't actually know that we were going to get any good return. So we were surprised by the returns that they announced to us. We are very surprised about this. And we praise them where it is necessary. We don't condemn them where they have done well. No, we don't condemn them. We praise them, tell them you have done well here, but we look forward to a better report. So that's the way it is. We're all partners in progress. But one is a masquerade. You put fear on the other person. So we don't want them to be a masquerade. We want them to be an open human being where we can interact and talk. That's why some of the policies somersault, we don't take it easy. We don't like it. Even they too don't like it. Some of the chairmen will want to see their shareholders and talk with them, in an
see them physically.
Meeting. Physically, talk to them in an open meeting. And they also take it in good faith.
Welcome back to watching Capital Market live on Channels Television. And I still have with me here Sir Sonny Nwosu, founder, Independent Shareholders Association of Nigeria. And we've been talking about the recent law there about virtual AGM meetings. And definitely shareholders want the meetings to be physical, open, where we can all see each other and talk face to face, ask the relevant questions.
Not electronically.
So that network issues don't knock you up. But definitely, the first quarter, of 2023 has been quite, challenging also, for businesses globally here.
Especially with energy issue.
Energy, inflation, investors are struggling to beat inflation at this time. How are investors doing?
Even the Naira, in fact, the Naira turned to dollar.
Yes,
the
Naira,
sourcing the Naira was as difficult as sourcing for dollars.
In physical cash.
Yeah, in physical cash was a problem.
What's the health of shareholders right now? How are shareholders hanging on with all of these issues we've seen in the first quarter? Are they making any profit?
The companies they've started returning first quarter results, which is also good. And we are hoping that the half year will be good. But you see, even if the half year is good, the last quarter of the year is the most difficult one because all the provisions will be taken before the full year is announced. But the first quarter is a sign that the second quarter will be good. But the third quarter is where we have a lot of reservations because that's the one that is the junkyard. That's the third quarter. All expenses which need to be provided for, we have to go into the third quarter. So but we are very confident that the year will be okay. Although we are looking up that the new government may have some very important decisions that will help the economic situation in the country. You know, we have issues like the devaluation of the naira. We have issues like in the system, we have something we call AMCON, which is also deep eating where they never sow. So we're also worried, why should the bank money be used every time they pay AMCON 7% or this and that? Why they ought to have left the system, but they now went to renew, because when sugar sweet so much, want to continue with those things. These are some of the things. And in the banking system, you have the issue of CRR, you know, which the central bank is capitalizing on to lock up some funds of the bank. They call it compulsory.
Because central bankers, you know, globally trying to fight inflation at this point, because at the end of the day, investors, shareholders are finding it really hard to beat inflation at this time.
Well, if the money there, in fact, if such money is released, 1/4 of it is released to the banks, they will bake more cake with it. They call it compulsory deposit. And it runs into billions of naira. So we're asking that if you're fighting inflation, give a little bit of interest to them. So they too will use it to support the inflationary trend, our economic trend, which is negative in the place. But they are not budging, which means they are enjoying the money.
All right, let's look at another issue now, another big one, you know, in Nigeria's capital market, the issue with Transcorp there. We saw Transcorp that rallied a whole lot for the past months now, when Mr. Femi Otedola there bought about 6% stake in the company. And we had, you know, some drama there. Mr. Tony Elumelu also, you know, buying a huge chunk and buying him out of his stake in the company. How are shareholders seeing all of this play out and all of this drama?
Number one is that it has helped to boil the price of Transcorp when Femi was buying, you know. But now, it has also created glut in the system of Transcorp. So those that want to sell now may not even get a buyer for it because they have settled big man to big man. They have settled that area. Has actually released some percentage to create value for Elumelu to be on top. So that is why the Yoruba said somebody's head can be used to break a coconut, but he may not be the one to eat it. The big men have settled themselves. We are now talking, because I can even see on your byline, you made something about it, you know. So unfortunately, they have also blocked the way for the smallholders to sell at a premium. Nobody's going to buy from them again. But they've created value in the market when the whole thing started, when Femi started to mop up Transcorp. So I think it is also good that they were able to settle, you know.
All right, so I guess
destroy the market for us.
I guess at the end of the day, when the elephants are fighting, it's the
grass that
actually suffers. Well, it's still a developing story that we'll still keep tracking and see how it goes. Thank you so much, Sir Sonny Wosu, founder, Independent Shareholders Association of Nigeria. Thank you so much for visiting us here.
Thank you for having me.
Thank you so much. All right, let's go back to Olumide Additional now. Let's check out what's happening in the U.S. markets. Olumide, great to have you. Hope I have you now. All right, that's what we're talking. Oh, fantastic. Okay, yeah, Olumide, I hear you. Great. So, yeah, a lot too has happened in U.S. markets. Trying to get you in the first half of the program. But how do you see the first quarter earnings? You know, we've seen most of these tech companies in the U.S. We know how when the rate hike started, the tech companies were going to take the brunt of all of that. How are the earnings looking for the first quarter?
Yeah, it was a blissful week. Looking at it from the market perspective, you could look at earnings from Microsoft breaking above the $300 mark, and that was because of impressive fiscal third quarter earnings. We saw cloud and enterprise really bringing a large bulk, and investors really pushed the stock for the week beyond 7%. I think Friday's trading session was really the best day since January, despite systemic concerns about market liquidity, particularly regional banks. We saw First Republic dropping below $2. This is a stock that has lost almost 95% of its value, but that did not deter the regional bank index. We saw US Bank Corp and Zion Bank Corporation gaining nearly 2% on the broader index. But interesting signs from Meta and also Google. We saw that Meta, the layoff really helped to reduce operational costs, despite the fact they seem to be losing money in the metaverse. But investors really want to share. Mark Zuckerberg was up 10 billion a day. That was the best he has ever had in more than 11 months. And oil stocks too was really booming on all cylinders, and that's why the month of April is likely the market ends green. We saw ExxonMobil and Chevron bringing stellar results. So it's been really a very interesting week for investors of good value stocks. But recession concerns are still in play. Snap really brought down low earning results. Stock was down 18%. We're seeing TikTok and competition in other spaces taking a lot of Gen Z and millennials eyeballs. Also, Amazon also at some point rallied after beating revenue and estimate, but margins have become very thin, and that's because they've not been able to take advantage of their cloud. So the cloud revenue decelerated, and investors punished them by the stock dropping 4%. But I think on the broader scale, it shows that the US tech giants have been able to mitigate against high operational costs by laying off non-essential staffs, going core into AI, and we're seeing things like ChatGPT for Microsoft paying up clearly, Ladi.
All right, before I let you go, Olumide, what are you expecting next week? Any market-moving data for those U.S. markets?
Yeah, news just broke out now that the likes of JP Morgan and some top banks are considering a final bid for First Republic. So a lot of people will be looking at what's really going to happen in the banking system, because, contagion banks, US banks have reduced lending rates, and somehow it affected the number of deals in this space. We could see Goldman Sachs and Morgan Stanley not bringing the kind of deals that they usually do. So I think the financial space will be more of a concern. But I think generally, the tech giants are printing much more revenues. Dollar has moderated, so it means overseas earnings will definitely be on the upside. But it's based on latest GDP report from United States. It shows that the US economy is somehow going to have at some point a mild recession, with Germany having zero growth in the last quarter. It tells you that the world's economy might really stall this year, Ladi.
Right, still that dreaded R word, recession, still with us right now. Thank you so much, Olumide, additional financial market analyst. Thank you.
Thank you for having me.
All right, so finally in the program, let's bring you some of the key expectations for Nigeria's capital and financial markets in the coming week. In the bonds market, traders expect an uptick in bond yields, as I believe investors will demand higher yields, which will be driven by significant borrowings expected from the federal government for the year. Over to the Treasury bills market now. Bearish sentiment is expected by traders, with yields to remain low next week as local investors continue to demand instruments amidst increased liquidity in the system. And for the money market, traders expect the system to remain awash with liquidity. They also expect the overnight lending rate to hover around the same level, barring any significant mop-up activity by the CBN. And lastly, at the equities market, the NGX will commemorate the return to full physical trading on the exchange with a closing gong ceremony on Tuesday, May 2nd. Traders also expected to release some decent Q1 earning releases across board, that will further reduce selling activities and support positive sentiment on the bourse. All right, that's the expectations. Thank you so much for watching. I'm Ladi Williams. Enjoy the weekend.